Hi guys. Today we will analyze AMD stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The short-term trend is negative, the long-term trend is neutral. It is advised to wait to see how this turns out. Support level is around $110. Strong support level is around $98. Resistance level is around $146. Volume is considerably higher in the last couple of days. In combination with a strong move down, this is a bad signal. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 32% per year, for last 5 years. We see that the average profit margin of the stock has been around 10% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 31% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for AMD company: bad, average, and good. First scenario. AMD will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 34%. Future profit margin would be low, 20%. Future free cash flow to net income rate would be low, 75%. In this case, the fair value of the stock today would be $53. The second scenario. AMD will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 40%. Future profit margin would be average, 22%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $74. The third scenario. AMD will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 45%. Future profit margin would be high, 24%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $106. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for AMD is 3.23. Minimum rate of return. I will use 12%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. We take higher risk, so we want to get higher rewards. For AMD, analysts forecast growth rate around 30% per year in next 5 years, and future P/E around 40. Again, I will use 3 different scenarios for AMD company: bad, average, and good. First scenario. AMD will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 10%. Future P/E would be low, 30%. In this case, the fair value of the stock today would be $82. Second scenario. AMD will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 12%. Future PE would be average, 35%. In this case, the fair value of the stock today would be $113. Third scenario. AMD will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 14%. Future PE would be high, 40%. In this case, the fair value of the stock today would be $152. As you can see, today the stock is fairly valued, $110, if we expect AMD's medium-high performance in future. It's a good company based on its fundamentals. And the stock is fairly priced. I own the stock and I'll buy more when it drops below $100. Company's strengths. AMD's return on assets of 35% is amongst the best returns of the industry. Return on equity of 55% is amongst the best returns of the industry. Profit margin of 26% is amongst the best returns of the industry. The revenue is expected to grow by 25% on average over the next 5 years. The company is financially healthy and should not expect problems in meeting its short-term obligations. AMD shifts to next-generation processors that will generate higher volume as well as command higher prices and margins, rising demand for GPUs, reflecting the growing need for these processors for machine learning and gaming. Risks. Lower demand for computers and servers, greater than anticipated pricing pressure, and slower than expected global economic growth. AMD's earnings are forecast to grow, but not significantly. The acquisition of Xilinx for $35 billion carries multiple risks, including potential issues with cultural integration, and a misreading of end market outlooks. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.